Hey guys, Sam here, middle of the day, October 10th, and I thought perhaps a good time to review some of the action that we've seen over the last 24 hours. Of course, we'll visit the majors and take a look at some of the markets that we've been analyzing, and maybe some things I can show you about this methodology as it's applied. And we're going to look at some things that have gone horribly wrong, some that have just followed perfectly, and I want to maybe there's some lessons here that I can share with you about this concept that I continually preach to you about staying consistent and not doubting when you're in the market, right? Because the emotion of money starts to cloud your judgment, and you've got to build a confidence that I understand comes with time in this methodology, so that you don't find yourself thinking, oh well, okay, so this has worked many millions of times in the past, but now that I'm in the market, of course now it's not going to work, it's not going to follow this, and I'm just going to lose money. So let's revisit some of that. So we'll start here, of course, with Bitcoin. This has been our reference chart. This 4 hour on Bitstamp, and I've pulled some of the things off of here so we can just look at it and evaluate and say, well, what do we see here? Well, of course, the first thing is that the market is hovering here at the median line, which is not unusual. Is it indecision? It's hard. It's hard to say. And I'm not necessarily calling any sort of a top here. It's more what we can expect with this hesitation is a move to one of the outer lines. So either we're going to stall here and blow higher, or what we're hoping for is a retracement down to the outside edge, where we can position for another run up at the top of it and to new highs. Now, that said, it's hard not to look at this structure and say, well, that certainly has the potential to be completing here. We've got very nice 1, 2, 3, 4, 5. It's all there. But so as to whether or not that would be a top, well, how would you go about trying to analyze it and say, well, what are the probabilities? Do I have the kind of clustering effect that we'd look for in some of the technicals to add to the stall at the median line? So let's just keep it basic. Let's start with the absolute most rudimentary. Well, so there's our first pull that has been the dominant pull. So, how's the market responding to this? Well, from low to high to the 50. Here's the first algo target, right to the 23, and you can see what happened there. So right, coincidentally, or not, right at the median line, we hit the negative 23, profit taking from algos, and where does it go? Right to the outside edge, and then we get the next run. Now, so you have two targets here for algos. One is the first target here, and then the extreme is the negative 618. So just negative 618 from this swing low, from our 50 here. This is an extreme. Now, markets can and do sometimes go beyond that. They'll go to the negative 100. They can go to the negative 168. But it's unusual for a market like this to go beyond the 618. So again, not calling a top. I'm just saying, point of reference. Look what happened here at the negative 23. Here we are at the negative 618. It looks very, very similar here. So what are we hoping for? So for a chance to re-enter the market, if we're working off of our 4 hour here, we just do the exact same thing. So where's our likely entrance? Well, this, of course, would be a spot we want to be paying attention to for next buy. That would be the 382 and the 50, which now lines up very nicely with the outside edge, right? Now, so it's possibility it can go lower, right? But it's just a question of risk reward and what your risk tolerance is. But that's certainly something I'd want to alarm this. If we come back down here, we get to the 38, I want an alarm. I want to know about that. We can also look for some of the alternate price projections. So if I grab my alternate tool, of course I'll do the majors. We'll go low to high, and we'll project it from this low. Not quite as clear. So the first relationship you'd look for is 100% of this move from this low, and we're to and through. Here's the next one we'd look for. Here's the 1272. All right, 127 square root of 1618, often you'll see the market react there. So we've got, if we're going to stall here and retrace, I don't want this to confuse you because we don't know that this is our top yet. So this is a contender. So that's why I like to draw these boxes, because if the market turns here, I don't have to redraw it again necessarily. So if we're going to continue to go, well, if we're going to go through the 127, then next target would be the 1618. So we draw a box up here, because if we're going to keep ripping, well, I guess at this point we'd have to be up here, and we want to include for the market to get up and test the outside median line. So what we'd be hoping for here is this kind of action. So we'd be hoping for this, followed by this. Now, do we get that? Well, no way to know. It certainly makes perfect sense. It's certainly a contender, right? It would just be, so if we go look at the smaller time frame, we'd have a 1, 2, there's the 3 come down for the 4, up for the final 5, and that would be, technically perfect, right? From one edge to the other edge to the negative 100 to the 1618 in an extreme market, that's a contender. So, potential roadmap. Only that. But technically valid, and it makes sense. So we'd be looking for that. So the question is, well, can I buy it here? Well, I would tell you this would be a very high risk place to be buying, given the extension here, given the median line. It's just low odds. So you could buy it there, and it could rip, $500. Certainly anything's possible, but I'm just trying to show you that if you're trying to be, technical and strategic and focused on where can I enter the market with good risk reward scenarios, I would tell you that, buying here is going to be high risk and low potential reward, because likely this needs to retrace. So let's just go look at it on the hourly and see if that makes sense to us. So what are we looking for? So right now, as we've been looking at over the last couple of days, we have this last move labeled here. And listen, I know I've got a lot on here. Let me take some of this off. No, I don't want to take that off. I want to take this off because it makes it harder to see. Okay, so we have this labeled as a 1. Here's our little ABC that turned on the 38. We're up to the 3. What are we looking for? We're looking for this. We're looking for that. Nice little ABC to give us confidence to be a buyer here. Now there's the 38. So remember, we're playing the odds. Most likely zone for a wave 4 is between the 38 and the 50. So that's what we want to see if this count is going to continue, and certainly, it looks quite good here. But we need to see this start to begin the retracement process, and we'd be looking for that subdivision into 3 waves. Now, sometimes, as happened here, it can be quite shallow. And we missed that because we were looking for the 50, which is the high probability. We don't get it. That's on the 2 wave. On the 4 wave, it's between the 38 and the 50. That's the largest percentage of 4th wave retracements. So that, again, that's just a spot to identify and, keep this off to the side, because if we're going to keep ripping, well, we'll just reevaluate as it goes. Oscillators can be helpful here. So we got very hot up here, and now we're starting to come down. Ideally, we'd get down towards the lower zone to create that energy potential for the rip back higher. So bottom line, you've got keep in mind. So we're at the outside edge of this channel drawn on the hourly outside edge. We're at the median line here on the 4 hour. So a lot of things suggesting that the best, if you're not already in the market and you're looking to get in, here's what you're waiting for. And you just wait patiently, because eventually it will come. Eventually. It may be starting here. This kind of congestion is typical when the market's, kind of, it's going through the decision process of, are we still going? You've got some nervous longs there. Some people will start taking profit, and that's what will start this process of winding down. Then we'll come down for the A, and this is why you see corrections in 3 waves. So this will be stops will get hit, which will drive it down here. Then there'll be the buyers here, which will be looking to buy that. Maybe they're trading it on a smaller time frame. There'll be buyers there. Then there will be the push up to try and get to new highs. But most typically, that will not make a new high, and then we'll get one more push down. And then the stops that are here underneath the A wave get hit, and that's what gives it fuel to get to the C wave. That's the typical correction subdivision that you see in kind of the trader mentality that causes that three-wave pattern. Right? It's not complicated. It's fear, greed, fear. Greed. Right? That's what causes it. So one to watch. We just alarm these. Really, there's not a play to make there just yet. So we wait. Now let's go look at Ethereum, which has been really difficult. So I was in and out of this yesterday. I took a stop on this. We had the potential. So why was I in? So we had the potential here for, here's the A. We thought we had a shallow A, B, C. This subdivided into 5. I was a buyer on, after this came down to the 50%, looking for this to be a 1-2. Doesn't do it. And now it can't be a 1-2 because if I blow this up, we've taken out the low here. So we thought we had a 1-2 potentially. This was the A. Here's the B. We had a nice little three-wave, 1, 2, 3, 4, shallow 5, rips for a 1 by the 50, doesn't happen. Welcome to trading, right? That's now small loss, small loser, right? So it doesn't hurt me, but nobody likes to be stopped out, and so the count is wrong. So I look at this and I go, why trade it? It's unclear. When in doubt, just stay out. There's no reason to be in here until we get more clarity. It's very hard to get an Elliott count on this. And as I proposed to you, if it's not just simple and easy to spot, wait for more information, wait for it to clarify. We don't know what this is, right? Eventually we'll be able to count it and identify it, but right now, what can we see? What are the absolutes that we can see? Well, if I swing low to high, I've come to the 50 and I've yet to hit that target, which is up here at this -23. Haven't been there. Now I've gone into some sort of additional correction here. So is W on my X on my counter trend? Am I going A, B, C? Could be D, E? I don't know. So why trade it? If it's I don't care how big an Ethereum bull you are, that's tough to trade that. We're just stuck in a range. We're between this 50 and the unresolved -23 up here, and all the way back to the 618. And that window between the 618 and the 65. So likely target right here. Here's the box that I've been, that's been drawn for a while. So this is the ideal algo target. So you got the -23 off of this 50 that has yet to resolve, and then you've got the 618 of all the way from the high to the low. So likely target. How does it get there? I've taken a couple of swings at it, so I sit and wait until I get more clarity. That's my view on Ethereum for what that's worth. Litecoin, another one where it's just very hard to trade. Now let me blow this up so we can take a look at it. So here now look, so this is why these boxes can be useful. So we drew this one here yesterday off of the median line in the 618. And the 65 here. It ticks the box. Now we go up. So let me show you this. I'll redraw it here just so you can see all I did. So we're going from high to low on the assumption that we had a low in. So what are we doing? We're expecting resistance at the 50 and the 618. Well, what does it do? It goes right to that little pocket. It actually goes a dollar through it between the 618 and the 65. Very common stop run. And then goes straight down. Where does it go? Right to the -23.6. So, if you have any question mark in your mind as to whether algos are in here trading, that should be pretty clear evidence to you. That is not coincidence. That is very deliberate algo target being taken there, and then you get the response. So again, it's responding technically, right? I drew that box yesterday on the assumption that we'd have this pull down here, and here was our target. So you've got the median line. You got the -23, and then look at the reaction. So again, okay, so algos are in. So what is their next trade? Well, it's hard to call it here because we don't have clear structure. This is a very complex correction. So if I had to trade this, I would simply do the exact same thing. I would just pull fibs. So here was the last pivot that went to target. So we're going to go down to this target, and here we've wicked the 50 in the same idea here, where if this is going to start to move, it's got to break the 618 on the way back up. So it's got to go impulsive. Otherwise, the expectation is target hit, reload, next 50. If it gets through the 618 and we start blowing through here, here's our Vegas wave. That's been quite good. If it gets through that, well, maybe now we're going impulsive and we can wait for the 2 or the 4. But until then, you trade it until it fails. So we've hit the first target, the negative 23. We draw it again. Where's the next target? Down here. So we draw the box. And what's our expectation? That if it's going to go up to the outside edge of the median line, then it's going to come back, to the outside edge here of our pitchfork, then it's going to come back down to the median line. There's the target for the negative 23. So that remains the likely path until proven otherwise. Until the market shows you something else, we got to just stay with what we're seeing. So you've got conflicting signals. You've got the larger 50 here that has not resolved to its target, but then the swing trading in here has been very technical. But until we see a change of trend, we've got to go with what we're seeing, which is just pulling fibs. Median line. We drew this outside edge here yesterday, right? All we did was go off of that and say, okay, well, here's our high. So we've got this outside warning line, if you will. So a pullback here and a failure, which, there's another trade setting up. So one to watch, but a new trade? No. I would say, we all want to get on the long side here. I don't think you have a bullish trade here, and I'm not saying short it. What I'm saying is too much Elliott craziness. If it's not easy to spot, next market. This is Ripple. This has been, remarkably technical. So again, here's this same concept here where I've drawn these boxes. Now, this was not rocket science. Here, you guys should be doing this by now. So all I've done is I've got the pitchfork on from our swing low here. Okay, look how perfectly technical this has been. All right, that's what. If you get 3 pivots, you draw a pitchfork. So here's our median line to the tick, to the outside edge, to hover through top edge, right? That's what we're looking for in Bitcoin if it's going to keep going. The hover, the retest, back to the outside edge, back to this edge, goes through, we get a warning line. But so why did I draw that there? Well, we've got from this swing low, we've got the absolute low here from this swing. We've got the absolute low here to the high. But if we're staying with the Elliott count, and this is our 4, and we don't know ultimately what we're going to get here. So we would, of course, want to draw from our 4 low to the high. So we get a little window here. So this is all I did. I drew this yesterday. I just drew a little box containing the 250s. And where do we go? Wick, into it twice, and then it rips. And where does it rip to? The median line. Again, this is, I kind of, feel like I'm harping on this, but I just want you to get this. So if you're here at these 50s, so the first place you're going to look for some resistance is the median line. That's the first structural target. The fib target, we have 2 of them now, right up here. So, now we've got a target. We've got structure and fib targets. So are we going to get there in a straight line? Probably not. Probably not. This is a 1 hour. So there's likely some sort of retrace here. So this actually, if this is going to keep going, well, we got an ABC. Is this a 1, 2? It's not real clean. So I'm not saying there's a trade there. I don't see anything that's, I guess you could pull the fib if you're dying to get in this market. We haven't gotten to the 50 yet, but the 50, interestingly, lines up right with the outside edge of the median line, right there. So, if you're looking to get in, we've got some fundamental news. We've got this Swift show coming up. But, you've got some things happening in Ripple that are causing all of this volatility. So if you're looking to get in, well, that's not a bad spot right there. You know, very low risk. You're in at 0.25 and you're stopped under the 65 would be 0.249. So we're talking very, very low risk there. So if you're looking to get in, you know, I'll just leave that little box there. So your expectation is you're just doing a 50 and, you know, you're going to come into the box and we're going to go to that target. So that might be first time. Look where that target, you know, right to the median line. That's the expectation. Median line, outside edge, median line. If you can combine that market geometry with the fib pulls, now you've got more confidence in entering the market there because you've got structure and you've got pattern and you've got price. Okay, makes sense? All right, how am I doing on time? Okay, I'm going to wrap there because I don't like these to be more than 20 minutes. So that's 20. I'll be back to you a little bit later with a look at some of the alts that we've been looking at lately and where there may be some new opportunities. Okay, that's it for now.